Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So, today's agenda, we'll go through our market update, update the current earnings trades out there. And then Joe has his analysis at the end. So let's get started. Obviously, today's a big day with the Fed not expecting any kind of cuts. I think the language, in the questions after will drive markets. So I think, this is kind of big picture. Two things driving markets right now is, the Fed, obviously what they're doing is in earnings also. So those are the two big drivers, and earnings seems to be going pretty good. I mean, some are getting hit hard if they have bad earnings or bad forward guidance, but overall it seems like they're doing pretty well. Joe, you agree with that?
I do, Josh. Oh,
Yeah.
Sorry, I was on mute, but yep.
Okay. I did want to pull up one little red flag I saw. This one here. We had that banking crisis. With the Signature, Silicon Valley, all that. So this one apparently it bought some of the assets of a Signature. So it's not, I mean, down huge. Just maybe a little flag. I still think March is going to be where a lot of stuff happens, but you never know with this stuff. But always, keep your eye out for bank related stuff because that's a big driver of everything, moving money around. So anyway, back to the market here. So SPX still in one, roaring, roaring along. It's been a really good state one. Russell, that one hung on into one, and now it's pretty much back to where it started. So we'll go through those. NASDAQ obviously won. We're still above 45%, so slightly overbought. We've been that way for a while. And pies up a little bit, kind of, basically like flat. So let's look at the pulse here. So we had that downturn and things just kind of leveled out. And, you can pretty much see it. So like when we have a lot of things in one, then you're going to be looking for two transitions. So we had that big spike, and then just pretty much that was it. Turned around. Not too much going on with sevens, because that's where the eights will go. And, pretty much everything else is, not much going on. So, just kind of watch those transitions to, 2 and 7, because, a majority of stuff, that's what 70% are in either 1 or 8. So, to kind of give you indications where things are going, but just kind of monitoring, the next 2 likely states. So 8, going to 7, or 1 going to 2. So, but, it's, we had that nice held firm here and kind of turned around. So, we'll see what comes out of the Fed, but obviously this is very good, getting highs. I just had a little bump there with the lows, but pretty much all highs. And, outside of this, time period, it's like October. We had the same type of thing here where we're making highs, and then see once they disappear, things start getting sketchy. So, as long as we're getting these highs, and, we have obviously, a ton of almost half the symbols in state 1. So, that's when highs happen, new highs, 52 weeks. So, obviously this is very bullish, seeing this kind of formations. So, I mean, you can just pull it back and there's your lows. So this, like that bear market started, obviously. But, before that, it's all green, 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 green. So This is our little canary. We did lots of analysis on this. Like when we start seeing those lows, let's be careful, right? So it's looking good overall. Yeah. All right. Bullish, bearish, nothing really. Pull it up real quick. You know, we had that steep drop, so that it usually tries to get down to 50, but you know, it held here, so that's a good, obviously a very good sign. That was 2 weeks ago. So since then, new all-time highs. And here it is. So SPX, you know, we emphasized this target 3 importance. So I think last week we said, you know, at this point it pretty much showed us that it's support here, and then you know, it's been running since then. You know, top end of the range is that 5,000. You know, bottom's 46. So been a really good state one overall. You know, like I said, like once we get up here and this can basically becomes, you know, really good support, you know, this thing can run. You know, I don't know how long, but you know, we've seen, you can pull up old charts of like Microsoft. I think it was like over 200 days in state one, just crushed it. So so this one's good. Looking good as far as right now. Like I said, you know, many times before, you know, state one, it's not always right, but you know, this type of move down here and this type of move here, that only happens in state one. These sustained long upwards, you know, moves. You know, obviously this is a bad one here, but 2 out of the last 3 are, you know, really good. And I guess that one's bad too. So 2 out of 4. But these are massive moves, right? So, all right, let's go to the chart. Not much to talk about on this chart. Obviously above all the MAs quite a bit. That's the bottom of the range. Top of the range is off the chart here, 5,000. So I would expect resistance, you know, if we can get up there. You know, I think a lot's going to happen. This week is a pretty big week. You know, we got Fed and all these huge earnings, you know, Apple, just big company earnings. So I think this will, you know, give us a direction, at least until, you know, for the foreseeable future, how things pan out here. So that's it. You know, 5,000 would be top the range, and that, you know, obviously would be all-time high. Yeah, we're at all-time highs. So Russell, no, been in here 28 out of 36. Definitely hasn't hit that average move. You know, we were messing around with that stop loss, but you know, I figured it, you know, down here, you know, another day or two would have been in state 2, but obviously had a strong rebound. Now we're back basically at entry. So that's going to be resistance here. Sorry, I did the wrong one. That's been resistance. Let me get the tool out. So you can see up here, you know, kind of ran into problems. Never really kind of got back up here to that entry. So this is going to be a little bit of resistance. You know, the top end is going to be 2,100. You know, bottom is 19. So that 19 held, that was the key. You know, and from there, just like took off. So, you know, I'm not sure how much higher it'll go, you know, depending on Fed earnings and all that. And really, and this is the most interest rate sensitive, you know, indice out there from what I've been tracking. So, you know, how the 10-year does, you know, that it's pretty highly correlated recently. So we'll see if we can get over that entry price, stay above that, and then you can make a run up, you know, to the next level of resistance. That'll be this in between 1 and 2, right at 2,100. So that'll be pretty strong resistance, I would think. And then from there, onward, upward, if we can get above that. But the encouraging thing here on the chart, let me get this out. It's not, that's 17, it's a 19. 21's obviously up here, haven't been reached in quite a while. Like the all-time high is like 2,400 or somewhere around there. But the good sign, all these previous occurrences, that 1900 broke. Even here we had a pop up. So that's the kind of key thing. As long as we stay above this, we're good. And it's not going to repeat these last three tops that we had. So obviously we broke above all those levels here. And then we held here. That so far, that was critical. So staying above 19, this thing could take off. Obviously next level is 2100, not pictured. It's a very good thing, bullish wise, you're getting off the charts. It's SPX and the even the Russell, near term, obviously longer term, I'll pull it out. We got a ways to go here. Let's see, back there it is. Like 24 something, almost 25. So that's the all-time high. Still a long way from that, but I mean, this is quite a, tale of two indices. This pretty much, sideways since a long time. Getting close to 2 years down in this base, but it's poked its head out here, and we'll see if we can get above that. Stay above that 2000, make a run up. Who knows? This thing could really take off, but it's all dependent on what happens with earnings, Fed, and interest rate. So speaking of interest rate, 10 years down to 3.95. So it's had a bit of a pullback. Got up to 4.15 something. Obviously well off that 5%. That was a crazy move there. So this is mostly Fed driven, but also going to be auction driven. So we've also been kind of keeping an eye on the auctions a little bit, me and Joe. So with more supply coming out. But that's it there. Fed tool, nothing today. First cut, so this is March, so that's the next meeting. So about 56, so it's kind of like almost coin toss between cut and no cut. Definitely a cut by May though. So, and that's like 50, right? No, that's only a quarter. Okay. So the first cut definitely by May. Long-term picture hasn't changed really at all. So from last month, pretty much steady, 1.5 cut, kind of, that's the average. So balance sheet runoff, still think, we're going to get into that percentage. That's 77.5 trillion, probably around March, I'm guessing. So that's just a lot of stuff coming together in March. That's kind of what I'm seeing. The tea leaves are telling me. So, all right. I think that was it. Quick roundup on the markets. Any questions, comments?
Josh, you want to put up the Qs or the NASDAQ there? Because there's I call this the week of the Whopper, not the sandwich, by the way, because of what you just said. We had two of the 5 of the 7 Magnificent 7 reported last night, and like you said, Thursday night, Apple, who reports that? Apple, the, we'll have five out of the seven reporting by the end of the week. And the
Yeah.
Fed meeting out of the way. And so yesterday we had job openings actually increasing, which isn't going to
Mhm.
help rate cuts much. But so by Friday, this, like I said, I call this the week of the Whopper.
Oh,
And,
yeah,
and
definitely.
and by Friday, I think we have a pretty good idea where tech is headed. But that's what I wanted to show you. I wanted to ask you to put up the NASDAQ or the Qs because I think that's where there's risk, if you will, for valuations as
Mhm.
grew. And they were not good. They sure didn't blow with all the AI hype. They didn't blow earnings out of the water. As a matter of fact, most of them were down significantly at the open this morning, kind of trying to make their way back. But
Yeah. Yeah, this is
so
pretty much a similar chart to SPX. Looks pretty much just like it, right?
yeah, so we'll see. But I'll have something to say when Joe talks or um, about earnings. When you were talking to the earnings, I have another comment back to when we talk about that.
Yeah. Yeah, it's a huge earnings week, obviously, all the big companies. So this,
Hey, Josh.
this whole site is, yeah, it's fantastic. It's got under the market's earnings. You can pull it up here, and it's really good. So go ahead, Joe.
No, that's exactly, I had pulled that up earlier. Just want to make sure everybody knows how to find that earnings page. It's this trading economics that we've talked about over and over. And as Josh, points out, you just go to the headings under markets, and at the very bottom is earnings, and it's just a wealth of information.
Yeah. Apparently you can export this too. So if you want,
Yeah.
it's really cool. I can't believe it. Like this whole thing is really good. Between the news and all that. Crazy.
Yeah. And the fact that they don't charge for it is mind blowing to me, but yeah.
Yeah, and there's like not really any ads that are really up in your face either. It's kind of crazy. So
And
yeah.
as it turns out, I will have a couple charts for everybody, but Dave in particular. And my first chart today is NASDAQ. So anyway, when we get to that.
All right. Cool.
No
All right.
rush.
Yeah. Yeah. Thanks, Dave. Anyone else? Questions,
Cool.
comments? No? No one? All right. Well, let's go into earnings. All right. So start off on the bullish pre-runners. So we got two open, MGM, Lincoln down decent today. And we got six. So we still got time there. The 13th, the 7th. So, got a while with that second one. But, closed positions. We only had that one loser, Synchrony, whatever, financial. Other ones, now these are profitable, didn't hit their targets. You can see over here 13. Pretty much hit the target. So three targets, one miss, and then so pretty good. I mean, no complaints on that, right?
nope,
Um,
good complaint. Good complaints.
Bullish runners just closed out the Goldman. So we got one here as Seagate, that one's down. Um, and then we're closed out Goldman on at the over 25. So we'll see if Seagate turns around. We'll see. Vol Rise, that one just came up. Disney, this one's been there forever, every quarter. So it's up a bit. So I got till the 7th. It's a pretty short trade. Usually not like a big profit, kind of like this. But usually wins. So And then we got another bad non-mover. I was tracking it in GLW, so it's down some today, but that one popped up to the top of the range. So 33 is top of the range. We're right below that right now, which is good. You don't want to be above it. So that one's down right now. But you got until the 9th for that to, basically come back. And then, we had one good, and then, that was bad. Delta got crushed. So that's it on earnings so far. Things will keep rolling out. A lot of runner
Say,
trades. Yeah.
Josh, I want to stop you on the ball crush once there. For say it's an interesting observation that I think might be worth a small discussion here.
Yeah.
Like I was looking at the Magnificent Seven just before the weekend started here, and they're all pretty much all were at all-time highs not too long ago. If they weren't there like last night.
Yeah.
Microsoft is the one I wanted to bring up. Um, so so if you're the ball crush, I think is a let's say undervalued strategy at certain times. And with markets being, if you will, I think maybe we're sort of like overbought going into when earnings season started, and with the run-ups that the Qs have had and the magnificent the ones that are the biggest part of the Qs,
Yeah.
which is why I'm a little concerned there, because that the Magnificent Seven are the drivers of a lot of tech and the Qs and the Nasdaq. If they're not performing with what's been expected to them, then the index is going to have a little harder time. But that's in my opinion, it's a really good time to use the iron butterfly strategy on those types of stocks when they're up at all-time highs. They're,
Mhm.
if you will, at a level of resistance now. Yet they're kind of like the fan favorites and the ones that where most of the money is, most of the people look at. So
Right.
they're uh, they've got momentum, if you will, behind them. But if their earnings aren't going to surprise significantly to the upside, the stock is going to have a hard time going up. So
Right.
so so if you think they're overvalued, you can just sell call spreads, and that strategy has been working pretty good on those types of stocks, or the iron butterfly, which so I did that for the Microsoft. I don't see it in here, but I used the same ideas behind the Delphian.
Right.
I sold the at the money strikes, and I think the market maker move was $17. So I used
Yeah.
those as wings. And okay, so when today opened, Microsoft was pretty much close to where it didn't move that much in
Yeah.
the after hours compared to the other stocks that are in the Magnificent Seven that haven't reported yet. They all moved in sympathy with AMD and Google, which were the
Yeah.
two that reported last night. Okay,
Hmm.
so they all so Apple moved down, even Nvidia moved down significantly, and it doesn't report for several weeks yet, in sympathy with the other couple that are, if you were touted as the AI kind of stocks, and the reason for a lot of market indices moving up, and a couple of these runs were AI driven. So
Right.
I was trying to find out where AI is. Like, show me where AI is contributing to the operating income and the bottom lines and whatever on these companies, and it's hard to find, if you ask me. I don't know whether you
Yeah.
guys can.
The only thing IBM, I think, they've had it for the longest time, that Watson thing, you remember? I think they
Right?
had all like that. Apparently they had really good earnings, and that was, it's actually starting to generate income, I guess, that Watson thing. So whatever, I remember commercials years ago, right? So that was the original kind of like AI stuff, right? So that's the only one that, I know of, chatbots and whatever. I don't know what I
Yeah,
guess
I
people.
was looking through the income statements and the best I could find, maybe Chick has some light he could shed on where to look, but I looked at they have a segment broken out for cloud computing for
Yeah,
Microsoft anyway. And it showed an increase, right? It showed an increase, and that's what we'd all expect. But it was like, I'm trying to figure out, well, how much billions of dollars have they invested in just AI stuff to produce the operating income out of cloud, and how much of that was not just result of faster processors and more memory that they're putting into their cloud. It's not AI, but it's other stuff. It's the picks and shovels for AI. But
mhm.
it's hard to break that out. It's like um, it's difficult. And I saw a warning
Yeah.
for
I mean, at this point, it'd probably be in like the, comment section type thing, from management. I don't think, because it's not making money, or probably not. Maybe IBM, but the other
yeah,
ones,
that's the point. That's the point I'm trying to make is that it's hard to find. So it's hard to like look into the numbers to see, and for investors that look for, well, okay, we invested this and we got that back as extra revenue or better earnings. It's like, okay, it's in the same numbers that we've been looking at, but it's not really broken out for AI. And I think Bazinga had a we should probably try to read that. I can't go get it real fast, but they had a really good comment about like the concern about all of the exponential expectations built into a lot of stocks that were AI driven, and so far they're not showing out in the big companies that were the leaders in where do you put money if you're putting it into AI? You put it into Google, you put it in a Microsoft, you put it into AMD, for example, or NVIDIA.
yeah.
Um, but so the AMD and NVIDIA are the hardware guys, right? But AI is really software. So it's like I'm struggling to find I think there's still some air to come out of that balloon a little bit.
Oh yeah,
That's
definitely. I mean, it's like every hype cycle. I remember like 3D printers like that, like, like that's gonna change the world. Like, where are those at? Like, when that,
or like 5G and cryptocurrencies, and you go back to the dot com, early dot
Yeah,
com. There was a lot of failures there for the few that survived, right?
yeah.
Anyway,
It's a
uh,
lot of hype. Obviously stuff will come out of it, but there's obviously, people get overhyped.
we're here. Okay, here's the question I wanted to get back to with the iron butterfly kind of thing. Okay, so I used the kind of the method for constructing an iron butterfly on Microsoft, and
Yeah,
so when at 9 o'clock or 9:30, say 9:30 when the market opened, I said, well, what if I try to close them now? I wonder what I could get. And it was like, I think the risk is, I think the credit I took in was like $1,300, and it was going to cost me like almost 1,300 to get out at 9:35 or whatever. So I said, well, we'll wait for a while and see.
yeah,
So I looked for a little bit, and I said, well, I'm going to stick a number out there just for fun. And I think I threw out, I said, oh, I'll put in an order to close at 800. If I, close out at 8 and throw it, collected 1,300, see if I can close at 8 for some, to see,
yeah,
because I don't know how to like play it minute by minute. I'll just throw a number out there and then wait for a little while. And then it closed. It closed a couple hours later,
right.
uh, and it said for so when it closed, and I can't really take credit for picking that number. That's kind of where I'm going
Well,
with this. Okay, so but what would be cool is if you looked at your profit and loss and your whatever portfolio tool there, it would be kind of cool to see, go back and look. Okay, I closed here, but where was the max? Where could I have closed maybe better if I, for whatever reason?
right.
Uh, that would have been kind of cool to see. We have 3 days left, right, till Friday. So these were, this Friday's expiration date is when I picked for, whatever. I
Hmm.
closed out the morning after, but well, what if I'd have held on for like today or tomorrow or all the way till Friday? It would be kind of cool to go back and look and see, okay, here's the trade management decision we may have made, but here's where the best one was.
Yeah.
And you can do that.
Well, I mean, you
You can
could put in
model
your
that.
virtual portfolio and just, the actual parameters that you got for your trade as the entry, right? You go back in time and put it in for the prices you got. And you can, I mean, obviously you're not getting like, delayed 20-minute snapshots, but you can get end of day stuff.
Exactly. I was wondering if we could do that. Maybe I'll call Joe up after the fact and actually put that in
Yeah.
and model and
Yeah.
see how.
Yeah. All you have to do is go in, select the day, and then add position.
Right,
And
right. Yep,
yeah,
yep.
that's it.
Well, I'll do it, but it might
Yeah.
be interesting for the. I think you learn a heck of a lot doing that.
Oh, yeah.
It'll help you learn or teach you the strategy that you're applying. Just saying.
Right.
I think it's a good tool for that. And when we do earnings and we're following or trying to trade the plan, you don't have a tough time to do that for everything that's out there. And
Hmm.
I don't. I admire Sadir for like being very thorough and the number of, using a big sample size, if not 100%. I tend to pick and choose from the ones that the stocks that I follow with the strategies we've learned when it come out in the alerts and trade recommendations.
Right.
And here I picked Microsoft just because, and I traded AMD too for the same thing. AMD fell a lot more, but I didn't quite trade that with Iron Butterfly. I sold cover calls because I had a couple hundred shares, and then I sold put spreads below.
Hmm.
So kind of a combination thereof. But um, and again, all of those kind of strategies are working significantly good
Hmm.
when stocks are at all-time highs going into earnings and there's been a run up to get to those all-time highs because it's
Right.
hard to then break through them. So again, call spreads work pretty darn good in that situation. And if it's a stock that's widely traded or highly, people are enthusiastic about it, it's not going to trade a whole lot lower. And even if it does, there's going to be buy the dippers out there that'll buy it anyway and
Yeah.
kind of get it back to even, so to speak. So
Yeah.
when you choose those kind of stocks because they're at certain resistance or support levels, I think it really can enhance your performance when you're using the right strategies.
Yeah.
Just saying.
Yeah.
So thanks for all the work that you do for providing the trade alerts and giving us as to what to look at. Thank you much.
Uh, yeah, we're trying to inundate you with ideas, and obviously it's up to you at the end of the day, but try and give you good ideas. So thanks, Dave. That's great. Great discussion. Anyone else for Joe gets rocking and rolling here? Okay. All right. You ready, Joe?
All right, Josh, and obviously I know we got the Fed coming up. Let me share this guy here. Geopolitics certainly maybe is becoming even more of a focus in the world at this point. So, in terms of the market, maybe having gotten ahead of itself, even though the underlying, strength is super significant. Geopolitics, could be an excuse for a pullback, is kind of around what Dave is talking about, things getting to new highs and at earnings, maybe backing and filling a little bit, the market just continues to climb the wall of worry. And, that wall of worry from my perspective in the short term is, the geopolitics and the whole thing that kind of Dave was talking about. We've had these monster run ups. So you sell on the news, and unless they're, what was it, NVIDIA earnings a couple quarters ago where it was just an unexpected blowout. Anything in the realm of close is probably time for the type of strategy that Dave was just talking about. So, and aside from geopolitics, lot of numbers, coming out in the next few days, of course. And actually, we got the employment cost index stuff today. Those numbers were a little bit lower, kind of good news for the market. And I think the number for Friday's non-farm that they're looking for is 175,000. I saw an article where, the government has been adding a lot of jobs in the past few quarters, maybe 53,000 last quarter, something like that. I think the number expected from government this month is 20,000, so a little bit less. So it makes the market, it's so fun trying to keep track of what's driving the markets. Not too much new on the homepage, except as Josh said, they've been excellent state one signals, in SPX, NDX indices for sure. And then getting to Dave's point in terms of NDX, for months we've been talking about NDX and XLK being leadership. So I wanted to pull up those charts for kind of the exact same reason, Dave was talking about, maybe a little bit of a pause in a very strong market here. So this is NDX. It's a NASDAQ 100 going back to the October lows. We've got the trend line, which comes in around 17,000. And then the target 3 that Josh was pointing out earlier is, all the way down at basically 16.5. That's a heck of a long way from where we are right now, which is 17.3. Just intraday today, NDX has rallied over 100 points from the low this morning, which was just under 17.2. I'm not sure. Last I looked, we were 17,330, something like that. So there's, lot of volatility, a lot of movement, but I wanted to pull up this chart and XLK just in terms of if we get a pullback, we get many big earnings numbers coming out on Thursday. What a good entry point. So again, the NASDAQ 100 trend line about 17,000. You can see that 3/8 retracement. 382 on the chart is basically right in these old January lows. I mean, that's a long way down. That's basically 1,000 to 1,100 points down from where we are now. But if geopolitics explodes, if sell on the news gains momentum, this I'd say 16,250 range would be an awful good entry point for NDX. Not saying we're going to get there. It'd be about a 5.5% pullback from where we are, but just kind of looking forward, if we get a pullback, where might I have some confidence? And from my perspective, that would be at an NDX. And right in between target 3 and target 2 of the Ashok's algorithms. So that's NDX. Warren did the same thing in XLK. It was XLK. It's 57, 58 days. In the state one, led NDX by a day and SPX by a week. So here's the trend line in XLK. That comes in right around 193. The 3/8 retracement is in the 188 range, and target 3 is 186, I believe. Target 3, 180, 86, 87. So they would be healthy pullbacks if the market decides to roll over. If it does, I think they'll be led by these couple indexes, and just wanted to offer that in terms of potential entry areas if we get a rollover and somewhat sizable correction in the market. That S&P oscillator I mentioned from time to time. Last time I mentioned, I think we were dead neutral at 0.1. That has rallied a little bit, and they talk about an overbought, but again, it's there's a lot of play with this thing. overbought above +4, oversold below -4. It happens to be at +4.8 right now. It certainly can go higher without question. But with all the news and with the size of the run-up we've had, maybe it is a time for some backing and filling here, which wouldn't surprise me at all. I have so the rest of the charts, and I got 12 of them just to pull up, and it's more about visualization than me talking about them. Here is SPX. Okay, so they're I got SPX, I got NDX, and the Russell, and I have them in each of the presidential cycle, the last 4 presidential cycles, starting at this time of the year. Okay, so February into the cycle, and then I run the charts out to either a top or a sell-off, but as we'll see, it's essentially tops. So here's SPX. Prior to the election in 20, we had to deal with COVID, so that was a stark wild card. But here, here's SPX. You obviously got the March low, but what I find interesting is, and we've talked about it before, we had a significant sideways market and bottom right into the election. Okay, and then after the election, SPX basically was on a tear for a year. I mean, so I just, again, I'm just going to pull these up, and maybe you'll take different things. I'm going to copy and paste these, put them on a Word document, and we'll include that in the share file. That's SPX, and that state one in 21 was one of the, I think, the all-time leading. I think we're about 145 days when you talk about the longest state ones for SPX. But let me just go through a few of these charts. There's NDX, same time period. We got COVID. Here's the election. Again, sideways market. Off we go. Nice correction. When you look at the big picture, I'll just go back and forth a little bit here. Leadership versus not, and maybe a little more leadership coming out of the S&P 500 in the 20 cycle versus the NDX, but both quite strong. Long run-ups before we got meaningful corrections, after the 2020 election. And then there's Russell here, and again, this kind of sideways move into the election. And then I remember Josh and I talking about just, Russell going sideways for so long. We had that false break in November of 22, and then, or was it November of 21? Yeah, we got that false break, and then, it sold off. But, just sometimes these big picture charts, I think, are worth having a look at, both from a leadership perspective and then kind of, looking at the tea leaves for going forward. So that's 2020. There's SPX, NDX, Russell. Back to 2016. Okay, again, February. So leading up into the election. Here we are. Again, SPX, solid market, 1212. But, just the market just doesn't like uncertainty, as we all know. And lo and behold, just like in the 20 cycle, sideways for quite a bit into the election. There's NDX, kind of same thing. And then off to the races after the election. And, to some extent, Russell, not quite the same, but very, very constructive markets, after these last few election cycles. Back to 12, and Democratic, another Democratic president as opposed to the 2016 cycle. Well, we actually had a correction in 12 coming into the election a little bit, and then off we went. Just very significant rally. SPX, NDX, sort of the same thing. Got the correction into the election in November of 12, and then SPX, I think a little stronger than the NDX, 12 years ago, but pretty strong nonetheless. And then Russell, pretty good breadth of the market. Had a big good breadth in the market coming out of the November 12 election. Of course, we were coming out of the financial crisis, and I'm pretty sure these Russell 2000 stocks were, I'll bet their PE was pretty darn low at that point, and so they had more room to move. And you can see you got a heck of a rally coming out of the 12 election. And last but not least, I pulled up the '08. Certainly, we had the financial crisis. So, I think we all remember March 9th, 2009, as the low in the S&P. I think it was 666. Is what? 666. Coming out of the election, and then just a rocket shot from those lows. Basically got after basically another sell-off after the November '08 election into the March lows, and then markets took off. So there's NDX. Interesting, you had considerably lower lows in the SPX after the November election in '08 versus NDX that held those lows. And again, so charts can really help and offer insights about what's coming up. And there's Russell in 2008 made a lower low as well, and then off it went. So I'll copy and paste them. Not sure, how much, how valuable, you feel taking a look at these is, but I've been talking about these things, and I think my biggest takeaway is, the periods leading up to the election, without something extreme like the financial crisis of '08. I'd be surprised if the markets just don't kind of move sideways, through the summer into the election. And if we continue to get good earnings, once the markets, once the election takes place, maybe the markets will be ready for another rip-roaring upside move. Although, between now and the summer, we may have an awful lot of room also. So happy to take any comments. Yes.
Joe, it's Lee.
Hey, Lee.
Hey, I find what you're showing to be real interesting, and I would like to lay on top of it maybe some of Dave's remarks, because, and yours, when we get running up to the elections and it gets to be kind of a flat market, I'd be interested in what trades you would look to put on in that situation. And then after the election, it seems pretty much like, let me just talk about the S&P. The S&P is on a nice rise. And so there are a lot of trades that come to mind there. But what would be best, or what would be in your mind for a trade if we think, okay, we're just going to be in this range for a while? What would you be looking to use?
Yeah, three come to mind real quick. Iron butterfly for sure. Time spreads can be outstanding, and then really covered calls. They'd be my top three.
And what was your second one, please?
Time spread.
Okay.
Time spread.
Okay.
And the thing about the time spread, Lee, that I think fair number of people don't understand is that is a long volatility trade. So you got to be aware. It's great to have the short-term decay, kind of put more in your pocket than that long-term option, but it is a long volatility trade. So you want to be aware of the vol levels if you go and put a trade like that on.
All right. All right.
Joe, can I add something to that last
Heck yeah.
very statement about the
Heck yeah,
calendar
Dave.
trades and those? Exactly right. And you want to put them on when implied volatility is low. So that's what Joe is saying, is like you look for implied volatility when it's low. That's the time to, and you're expecting it to go up. That's when you get the best out of a time trade. And the quarter, I just wanted to add this, is usually the summer, late summer is a good quarter to start doing that, because that's when there's lower, market participation. People are vacationing and such. So it's a cyclical good time of the year when you'll find that a lot of the indices and a lot of the individual stocks within indices are at their very low IV percentile for the year. So look, my suggestion to Lee, I think it was Lee that was talking there, would be to look at IV percentile and look for low levels there, and when you expect it to go up. So if you put that study on your, against your chart somewhere, if you have that capability, just you can kind of like look back a year and say, oh, well, might be a good time to start. That's a suggestion there. But yeah, those are
All right.
my favorite trade leading up into the Q3 and 4 earnings is a long time spread to get up there. It's like a preemptive strike against the pre-runner earnings trades.
Hey,
So,
Dave,
thanks, John.
Is that your calendar trade that we used to speak about?
Yeah. Yes.
Okay. Okay.
Yeah, you can play them. You can play them to the. You can be a little biased too. You can, if you use your strikes above the price, you're expecting a slight gradual increase or whatever. Use your strikes a little bit above the market if you're thinking it's going to be a little bit gradually. You're following the trend for the last couple of quarters, and they look like they're kind of like dying slowly or whatever, or not dying slowly, but just drifting lower. Then just use strikes that are below the market. And the volatility is the thing that kills that trade, though. I'll throw that in as for the downside of the time spreads. Is if you have a glitch in volatility, either to the upside or the downside, it can hurt that trade a lot. Just saying. There's good things to do and bad things to do, or bad sides to each strategy out there. Thanks.
Yeah, Lee, and just to clarify, calendar spread, time spread, that's the same thing.
Right. Thank you.
Sure.
All right. Thanks for the comments. Appreciate it.
You're welcome. Thanks for the question. Anybody else? Before we go to the Fed meeting? All right, Josh.
Yeah. All right. Well, thanks, Joe. Intriguing as usual. Thank you to everyone. Any last questions, comments before we wrap it up? All right. We'll do it again next week. Thank you all.
Yeah, thanks a lot, guys.
Thank you, everybody. Thanks for joining.